housekeeping rules for today's session. This session is recorded, and keep your microphone on mute mode during the session if you are not on listen-only mode. And you may post your questions at the public chat, as you can see on your screen, on your left side of the screen. And if you're not comfortable to post your questions in the public chat, you may message the organizer to address the questions during the Q&A. And your feedback is important to us. We will send an email after this session for the survey. Last but not the least, please bear with us in the event of any technical issues during the session. So without further ado, I would like to welcome our moderator for today's session, Mr. Anndy Lian. He is the chairman of Decentralized Foundation. Over to you, Andy.
Hi, Jen. Can you guys hear me? Just to make sure. All right. So
yep, we can hear you.
Great. So a quick introduction about myself. I'm Anndy Lian. I'm the chairperson of Decentralized Foundation based in Switzerland. Apart from the work with Decentralized, I work alongside with government. So my last work was with an international organization called the Asian Productivity Organization. I'm the only blockchain advisor within the group, and we have been giving very sound and practical blockchain adoption advice to 22 countries. During my free time, I also like to look at politics, spend time on esports and look at upcoming trends. So that's also how I got myself into the blockchain space. So today, while we look at the technology and how this COVID-19 has affected us, I need to say that the COVID-19 crisis has revealed a lack of connectivity and data exchange built in our global supply chain and our very much daily life. So our future depends on building a more transparent and connected network together. And this is how we see blockchain come into place. So blockchain technology has grown a lot in the last 3 years, and we see that the ASEAN bloc will be a very big powerhouse in this situation. We will create transparency and fairness and saving a lot of business time and money using the technology. So today we have 3 speakers in the house. First, let me introduce them. Prakash, CEO of RHT Fintech Holdings. He will be talking about tokenization of real estate. A bit of background about Prakash. He's the founding member of RHT Law Asia and RHT Group of Companies. He has over 20 years of experience in managing professional services firms, including top law firms in Singapore, with regional and global focus. His responsibilities include the strategic alignment of business groups and their subsidiaries, and the development of an ecosystem of professional business services, serving clients from diverse industry through every stage of their business life cycle. In addition, he also manages the growth, development, restructuring of their regional expansion in business for the corporate finance, advisory, governance, compliance, risk management, communications, and public relations, and of course the fintech platforms covering digital assets and tokenization of blockchain. The second speaker will be Tan Chung Huat. Chung Huat is a senior partner of RHT Law Asia LLP. He will talk about the blockchain regulation framework. Chung Huat is the senior partner, and like I mentioned, he is also one of the founding members of RHT Law Asia and the non-executive chairman of RHT Group of Companies. His role as non-executive director and deputy chairman of SDAX is to provide strategic advice on their growth and business. Chung Huat has been involved in sectors such as fintech, training, learning and development, consulting, and advisory on wealth and asset management. He has extensive experience in corporate banking and project finance law in Singapore and the region. He acted in numerous significant corporate transactions in the area of IPOs, RTOs, MBOs, restructuring, M&A, and financing of major real estate and infrastructure. Last but not least, we have Dominic. He's the CTO of Sindax, SDAX. He will be joining the panel later on to talk about the future trends and what we should look out for. So let us welcome our first speaker, Prakash, CEO of RHT Fintech Holding Private Limited. Prakash, over to you.
Thank you, Andy. Very good morning to everyone who is dialed in. I expect a few more to be coming in, judging by the original list that was sent out. But nonetheless, it's indeed encouraging to see so many of you who have shown interest in the blockchain and its impact on the real estate market. But before I begin, I would just like to conduct a quick poll on the subject matter. Let me just get the poll started. Now, the first one is a yes or no answer. And there we are. The first question I have is, how many of you are presently working on blockchain projects in your respective organizations? So we can just get everyone to quickly answer that question. Judging. Okay. So a fairly large number have responded. Now let me just publish, give me just 2 seconds to get all the final tallies in, and I'll publish that info. All right, and this is it. You can see from your screen, I believe 37% have said yes, and 63% have said no. Now let's, I need to poll that 37% of people who said yes. Is if you are involved in a blockchain project, can you tell us specific to which area? A, real estate market, B, other asset class, or C, other services or product? It can be now or in the near future. Let me just go back to poll and I will just, there we are. Okay, so there's only one who is actively involved in a real blockchain project. Okay, good. I mean, it's good to find out, and then good to have a sense of the audience. All right, let me just publish that. And okay. All right, so we're good to go. Now, the first thing on most people's minds when you mention blockchain will most certainly be Bitcoin, which traces its roots to circa 2008 when the phenomena first started. Bitcoin is seen as a freely traded independent currency. But why is it that Bitcoin is a hit? It's because people saw transparency and security and put trust in technology and algorithms over individuals or governments. And that basically the governments who controlled mainstream currencies. Now let us take a step back and look at the horizons of network innovation. The first horizon was the innovation of the internet, which is the backbone of communications as we know it, tying together computers to operate in a peer-to-peer sort of an environment. The second horizon of network innovation was the world of the World Wide Web. Put more accessible user interface on top of that internet that we know. Then over the last decade, the third innovation of cloud computing emerged, where we could now deal with large amount of data. And soon after that emerged the fourth innovation, which is mobile internet and IoT, Internet of Things. That put a large amount of control over many things in the palm of our hands. Now, we see the fifth horizon of network innovation, which is to build digital trust through blockchain technology. And we expect this to bring about major changes in a lot of what we are used to. Blockchain technology is being applied to deliver new products and services, enhancing trust in both record keeping and financial transactions. We are already seeing mass adoptions across supply chain, logistics, identity management, and the list goes on. Closer to home, we have seen MAS, Temasek, JP Morgan develop a blockchain prototype for multi-currency payment. Then there was the blockchain cross-border trial between MAS and the Bank of Canada, a trade finance platform by DBS, and of course the marquee project Ubin, which is a collaborative project initiated by MAS with industry players to basically explore the use of blockchain and distributed ledger technology for clearing and settlement of payment and securities. In the current real estate technology world, a digital security or securities token issued on a blockchain, or what is termed as tokenization, can be used to mean fractionalization of rights to a single or a portfolio of properties, of course subject to traditional security laws. The ownership is verified and recorded on a distributed ledger. Through property-specific tokens, issuers are now able to provide access to their asset information, create different classes within each type of token, hard-code waterfall payments, providing both a layer of transparency at creation and at the same time compliance and verification upon making each payment. Now, the global estate market is valued at more than 200 trillion US dollars. Most debt fundraising is done through traditional bank borrowings and the issuance of corporate bonds. Equity is mostly owned by institutional investors, either directly through pension funds or in specialized vehicles like private equity funds. Traditionally, there have always been difficulties for real estate developers to obtain loans for the purposes of residential or commercial development, and also to manage their cash flows. Project costs can be millions of dollars, and 60 to 70% of the total capital is usually funded through bank loans. And the balance will be through other forms of debt, corporate bonds, and equity raise. Real estate as an asset class has traditionally been transacted through private markets. Now, REITs cover a percentage of the overall underlying real estate market. There are many more opportunities we feel out there that are harder to access. Single asset real estate companies looking to raise capital, real estate funds seeking exit. Tokenization can address these by reducing barriers and friction faced by investors in traditional real estate markets. Tokenization also brings much needed liquidity and transparency to a traditional opaque industry. The ability to trade shares in real estate, in real assets, in real time, the same way public companies are traded in stock markets, should attract more investor attention and unlock the potential for more ambitious and unique real estate developments. Of course, investors can already buy and sell real estate trusts, but these often have high minimum investment and represent a large portfolio of companies rather than single property or a new development. The tokenization of real estate is giving investors and owners alike the freedom to raise, invest capital how they choose. Tokenization will also impact other illiquid assets like private equity or venture capital. Now here we have an example of a tokenized project. The Aspen coins are tokens which represent the fractional equity ownership of the San Regis Aspen Resort in Colorado. The tokens or digital assets were sold to investors through a security token offering, or what we call STO. This was originally promoted by a crowdfunding business, Indiegogo, and issued by a blockchain-powered fintech firm, Templum. Templum are broker-dealers, and through a SEC compliant platform, they did a fundraise of 16 million euros. This was the first ever cited real estate security tokenization, which has led to many other projects taking the same path. Now we have, if you were to look at a list of some of the projects that have been tokenized, you will note that the types include single assets in the case of the San Regis Aspen, Colorado, and also debt and fund tokenization. This data was published at the beginning of this year by Oxford University together with CBRE. This is regarded as a provisional description of a nascent market. Blockchain technology and security tokens with smart contracts will certainly... I jumped the slide here. Hold on a second. There we go. There we go. Okay. Sorry about that. Blockchain technology and securitized tokens with smart contracts will certainly be a game changer. It is now possible to fractionalize assets and offer investors economic benefits such as revenue or profit sharing, dividends in the case of an equity token issuance, interest or coupon payments for debt token issuance, and even legal titles attached to such assets. Innovation is particularly relevant to the property owners who can now tokenize single units of their properties with or without rent in fractions to attract more investors. They can also issue STOs against a portion rather than the whole of a building to raise debt to finance new projects. Owners of large mixed residential or commercial developments can issue hybrid STOs attached with utility benefits that can help generate economic activities within that development. Blockchain real estate market would help with creating new business models of connecting potential buyers and sellers. For example, it is easy to envision how properties of all kinds could be liquefied, tokenized, and traded, much like stocks on an exchange. This blockchain will also positively affect transaction times as property sellers find they can sell fractions of shares on a particular property, as opposed to having to search for a single buyer. It is also more than likely that the whole real estate industry will benefit from this shift by lowering the barrier of entry to real estate investment. New definitions of property ownership and rental contracts will arise from this shift in the real estate business. The user-friendly automation of all relevant processes and documentation on a decentralized blockchain real estate platform could also help by cutting out additional inspection costs, registration, loan fees, as well as property taxes, all enforced by quantifiable smart contracts. combined with new models of flat ownership that could potentially span the global market, decentralized payment projects could be used to facilitate low-cost, high-speed transnational micropayments, which would distribute the payment among all stakeholders concerned. Within the context of payments, introduction of smart contracts into blockchain real estate ledgers and transactions has clear potential in streamlining various real estate processes, such as releasing apartment ownership, rental documents upon completion of a cryptographic payment transfer, or settlement process. The benefits of this aspect of blockchain use cases when applied to real estate are already being recognized by a variety of private institutions, government bodies, and some of which I've cited in some of the earlier examples I gave. Another interesting concept is what we call decentralized financing, or DeFi. DeFi is a rapidly growing movement which aims to basically revolutionize existing financial services by creating decentralized applications. The existing centralized nature of finance industry has enabled a few powerful intermediaries to position themselves in the middle of a system and extract rents from other participants. It is clearly an oligopolistic structure that has stifled competition, decreased efficiency, and increased the cost of financial services. I would like to draw your attention to a Business Times article published on the 19th of June this year. The author recognized that there is a sizable and growing house stack with significant potential for ASEAN markets to securitize residential property ownership and for Singapore to take market leadership. Innovation through new technology, decentralized financing would deliver efficiency gains and cost savings by enabling direct peer-to-peer transactions. Other major markets are already embracing decentralized financing, digital assets, and disruption of the real estate market as well. This is what happens. Switzerland's leading stock exchange, Swiss Exchange, has invested in an institutional trading platform with plans to use it as a gateway into digital asset space. London-based IPSX in January 2019 achieved recognized investment exchange status and became the world's first regulated securities exchange dedicated to the initial public offering and secondary market trading of companies owning single and multiple institutional grade estates, real estate assets. Here we have a simple illustration of a primary issuance using smart contracts. The issuer will have to upload documents including assets to be listed, contracts, investment memo, and other such documents to the smart contract. The investor makes the decision to proceed with the investment. The smart contract will forward the proceeds, whether in fiat or currency, on behalf of the investor to the issuer, and in return receives token. There will definitely be legal contracts binding this transaction as part of the process. Token issuance can be done using blockchain-based Ethereum or ERC protocols. This is one of the most commonly used protocol layers. The use of stable coins like TUSD will mitigate exchange losses. Here we attempt to lower cost of issuance by removing traditional intermediary processes. The issuer's obligations are programmed into smart contracts, and more importantly, the reduction in time taken to raise funds. That is one of the key considerations. Let me now provide you with an example of how we envisage secondary trading of tokenized assets. To start with, there will be the setting up of an account. Investors signing up will be required to provide and upload relevant documents for KYC and AML compliance, something that we all are familiar with. A new account with an e-wallet will be created in the database, and at the same time, the token ledger is updated. For token sale or trade, or the change of token owners, when the existing token holder wishes to sell the tokens and or a new buyer wishes to buy the tokens, the exchange will invoke a token transfer. When there is a match on both the buyer and the seller, the token transfer will be carried out where the buyer will receive the tokens and the seller will receive the payments, whether in cryptocurrency or in real fiat currency. In the meantime, the token ledgers are accessed and updated accordingly to reflect these changes. We believe that for a secondary market to be effective, there must be continuous trading 24/7, lowering costs of securities servicing, rapid settlement and clearing, liquidity premium, immutable ledger of ownership and transaction history, smart contracts that allow for programmatic regulatory compliance, robust market surveillance, and of course, a very, very strong cybersecurity protection layer. Now, if you look at the chart that is on the screen now, the global market volume for asset tokenization is expected to reach 24 trillion by the year 2027. And this is from US 0.5 trillion in 2019, and implying a CAGR of easily 62%. In respect of global real estate market, despite the recent volatility, global construction output is expected to reach US 12 trillion by 2025. And this is from a US 8.7 trillion in 2012. This prompted largely by booming middle-class urban population in Asia, Africa, as well as in South America. Between 2010 and 2020, it is expected that more than 1 billion additional middle-class consumers will surface globally. With this positive long-term outlook for global real estate market, there are opportunities in the growth of the industry with the introduction of tokenization to facilitate more efficient fundraising for asset owners in their construction and expansion plans. Singapore, of course, has been the leading fintech hub in Southeast Asia, and is also aiming to become the same for blockchain innovation. There are numerous players incorporating blockchain technology in trading, financial services, insurance, as well as digital products in Singapore. Asset tokenization is looking as a good prospect. Singapore Infocomm Media Development Authority, IMDA, released a blockchain landscape map in 2019, and it showcased the categorized and it basically showcased and categorized the blockchain startup scene into sectors across industries. Singapore's government is driving and promoting the use of blockchain innovation and adoption through its initiatives, and is expected to ramp up such efforts in the next few years. We are given together that they are even using blockchain to do identity management, which is something which is going to be really big in the Singapore market. The Monetary Authority of Singapore has said that the record-breaking investment, as you can see from the graph, is a sign that investors recognize the potential of Singapore's fintech ecosystem and the outlook for digital financial services, not just in Singapore, but also in Southeast Asia. Singapore is taking the market leadership role as it has currently the largest REIT market in Asia ex-Japan, with 44 REITs and property trusts and a total market cap of around Singapore dollars 94 billion. Singapore has shifted from being a predominantly local REIT market to a global listing hub, where most of Singapore REITs have diversified into international property portfolios. S-REITs have approximately 80% of their properties outside of Singapore, but they have the lowest volatility and amongst the highest returns in the region. S-REITs are expected to gain more traction in the years to come, mainly supported by global asset portfolio, clear rules and incentives of the Singapore's regulated environment. And this is very crucial. REITs, in their continued quest to acquire new assets, will also be looking to funding these new acquisitions. And tokenization, we believe, will certainly be a key consideration, especially with costs and time taken to raise these funds. In conclusion, it is important that we recognize the framework set up to support fintech companies who will play a major role in providing the technology solutions. An example of this would be a blockchain-based digital asset exchange, and there will be many to come, for the issuance and trading of real estate and other asset-backed tokens or asset-backed securities to help asset owners with an alternative source of fundraising. We also need to acknowledge our stringent regulatory framework to support this innovation so that Singapore continues to be highly regarded for its governance and compliance. With the above strong fundamentals in place, Singapore, as a financial hub that embraces innovation with a robust and balanced regulatory environment, will continue to attract strong market participants, including global investors and asset owners. With that, I wish to thank you for your patience, and I hope you enjoyed yourself and enjoyed this session. Thank you very much.
You are now unmuted.
Thank you, Prakash. Next, we have Mr. Tan Chong Huat. He will talk about the blockchain regulatory framework. Chong Huat, over to you. There could be a small technical issue, so please hold on for a while.
Hi, Andy.
Hi, Chong Huat.
Hi. Is it my turn to start?
Yes, it's your turn, Chong Huat.
Sorry, I went to the restroom.
No problem, no problem.
Hi.
You may proceed.
Good morning, I'm Chong Huat.
All right.
Thank you, Andy.
You are now muted.
Hi, like Prakash, I would also like to start with a poll. So the first question I have for you really is, do you think blockchain will replace the internet? The poll results are still coming in, so just bear with me. Okay, you could see the results there, and I think the majority of us got it right. I just want to explain that blockchain rides on the internet, so it does not replace the internet. What I think, if you can summarize what blockchain is, I think blockchain will represent the golden age of internet, where because of the application of blockchain, the data that is on the internet will be more efficiently, better, secured, trusted, and then be deployed properly. So it's actually it will not replace the internet. It represents the golden age of internet. The next question I want to poll is whether blockchain is about storage and transfer of data. So again, it's a yes or no. Okay, I must admit that this is actually a red herring, okay? In the sense that blockchain is not only about storage and transfer of data. What is even more interesting is that blockchain is able to allow the management of software application so that you can actually give instructions for what I call autonomous execution of the obligation that parties agree to under the smart contracts. So you're not wrong to say yes, okay, but those that say no, I think you've listened to Prakash carefully. There is a smart contract application in the latest development of blockchain. So my third question, which I'm polling, will be: blockchain cannot be regulated due to its transnational and anonymous nature. Sorry, the poll results early on was very close. It was 50-50. So again, the poll is yes or no? Okay, I just published the poll results. I'm not sure whether how many in the audience are lawyers here. All right, I would want to present to you later that yes, blockchain can be regulated. Not regulated completely maybe, but it can be regulated. And I'll share with you what's the framework and what are the modes to be considered. I now take the second last question to poll. Blockchain should be banned as it supports criminal activities. Again, yes or no? So I would say that many of us here can be regulators, and I think it's this mindset that we have seen regulators adopt in recently, because initially some of the reaction really is to ban certain activities that are related to blockchain, like Bitcoin. But I think the regulatory mindset has been enlightened and are still evolving. I now pose the last question, which is, blockchain enables machine-to-machine execution without people input. So again, it's a yes or no. Okay, so the results has been published. My submission to you is that blockchain does enable machine-to-machine execution without human input. What it means is that once you have put it on the blockchain, you put it on a smart contract, the smart contract can autonomously execute so long as certain conditions are satisfied. So once you give the instruction, machine to machine can be connected, and you can actually execute without human input. So thank you for your patience. I will now get onto the presentation today. So very quickly, what are the characteristics of blockchain? I would like to cover the characteristics of blockchain, then progress to talk about the regulation so that everything will fall in place. So one of the key features of blockchain is about disintermediation. So the key thing about blockchain is actually supported by a peer-to-peer network. It is supported by different people working together based on consensus without reference to a central authority. So this disintermediation creates this departure right now that we see in our daily habits and our mindset. One example would be, in a lot of our transactions, there is a central authority or there is an agent. So one example is, if you go to eBay, right? When you want to buy and sell something, you go to eBay. eBay is the agent. If you want to collect your personal particulars in a way or affirm it, you need to go to say your land titles, for example. You go to the land titles agency to get a confirmation. Blockchain takes away all this. The next thing is about resiliency and temper resistance. Because of the nature of blockchain, which is information that is verified and audited by a group of people working on it. So to change any information, you require the same people to consent, right? So therefore, it's hard to tamper. And because of the block of information, it is resilient. And all this also gives it transparency. And then it's difficult to repudiate because the information is there, is viewed by all your peers in the computer network. So together, these are the key features of blockchain that we will talk more later. The other thing really about blockchain is that there's pseudonymity, in a sense that you can actually transact without revealing your identity. The next thing is consensus, which I've already mentioned, the consensus of the peer group, the consensus of doing things together. So can you imagine if you want to change something that has got a peer group, you literally have to mount a takeover of the group of people, or even change the underlying protocol so that you can change whatever that's on the blockchain. And lastly, on autonomy is what I raised earlier in relation to smart contract, because once you put a smart contract onto the blockchain, it will execute and it will be autonomous. So with this, I move on to the next slide on the application of blockchain. I'll do this quickly, but I just want to let everyone here know that the application of blockchain is now widespread. It took a while, but in the last 2 years, it has taken off. So in the areas that I've listed here, you can see, you really see a lot of adoption of blockchain. So finance is, you've seen payments. Banks have taken on license to become digital banks. Banks are very intrigued with payments because of the capabilities of blockchain. So you can see banks adopting blockchain to do remittance, and remittance today can be done just between computer, press of a button, you eliminate the middleman, you save a lot of money. You also heard from Prakash about trade finance. DBS has signed on as the first local bank for the contour trade finance that actually is a blockchain that issues LCs, validates LC. So it's a new way of finance. Trade and commerce, with blockchain, you can actually go down to the provenance of the goods, where they come from, what is the supply chain in terms of the transport arrangement, the labor, and then you can also look at sustainability issues like emission, even corruption. So it's the whole chain that can be monitored and could be surveilled by blockchain. Healthcare is something that's very important. It's about storing information, especially medical information, in a secured way and in a way that can be shared very quickly because you might need this information urgently. You know about some of the leaks in the public healthcare sector. With blockchain, because of the encrypted nature of the information that are verified, it gives a better sense of security. In public service, we can talk about voting, we can talk about procurement, and even public benefits. So these are things that blockchain can be applied. And one of the main things that blockchain will be very good at will be for contractual obligations or outcome that you want to see that are really very objective, very strict, and very narrow. So that's really a good application frame parameter for suitability of applying blockchain. Now, the need to regulate blockchain really is because of the dual nature of blockchain. In as much as blockchain is efficient, it's transparent, but the fact that it is decentralized also means that it can work outside of the central authorities. The fact that blockchain is disintermediated also means that all the values and virtues of blockchain can also be applied towards criminal activities. So the good and the bad of blockchain. Likewise, because blockchain is global in nature, because of the nature of the peer-to-peer network, it's difficult to hoard any blockchain that is already in the system. It's difficult to change the underlying protocol. And because of its widespread application, governments in the world are thinking of ways in which to embrace the technology, and to embrace it, you must learn to regulate the technology. And now I come to the regulatory framework that I would advocate, and the first one is rather simple for those that are legally trained or compliance trained. It's a difference between principles and rules-based regulation. An example would be, if you go for principles-based regulation, it would mean that you would just say that you should not steal from your client's account. That would be based on a principle. And then you take action towards that principle in relation to the way you regulate. Rules-based would be, you set out clear rules to say when, why, how you should not touch the client's account. And you put roadblocks or put tripwires or prohibitions when you approach the client's account. So that's principles, that's rules-based. In between these two, rules-based will be clearer for execution because it will be codified, or the rules will be listed, so it's easier to see and understand. And in a way, you will be just ticking off the boxes. But what it means really is then there will be many rules to comply with that you have to look at, and the ticking of the box method in looking at something may miss out what is more fundamentally important. In other words, you fail to see the substance of the transaction, rather you stick to the rules or the letters of the regulation, which may not serve the objective behind the regulation. So principles-based framework would be better, because once you understand principles, it's easier to apply your regulation. But more importantly is, in a new technology that is novel, that is evolving, principles-based will be much suited, because then you can accommodate, you can adjust, and you can react to those changes and the adjustments that you need to make. I next want to share with you the Oxford Blockchain Regulatory Framework. So this framework is developed by Oxford, and if you can see the way they have approached the regulatory framework is, number one, it's a focus on outcome. When you focus on outcome, you actually will be looking at the main objective of your regulation, and then you set a test against it, and then you then see whether the results are aligned with the test and the outcome that you are seeking. The next mindset about regulation here is about protecting all stakeholders. So blockchain, being a democratic network or system or technology, should rightfully protect all stakeholders. And in that protection of all stakeholders, the trust element in the technology is enhanced. So when you come to the regulatory bit of blockchain networks, regulators with this mindset will take a more proactive view and response and even approach to address the concerns of all stakeholders and not just any primary market participant. Next is about fostering trust. I think the whole blockchain technology fosters trust in itself. The regulatory framework, likewise, should mirror the effect of blockchain. So it's important to have agreed principles in the way that the stakeholders will be actively involved, and the rules when they are engaged in those activities. then balance competition. Balanced competition looks at really about supporting multiple competing parties with the concept of fairness. So one good example will be the digital license, banking license given to aspiring companies applying for the banking license in Singapore. So what it means is that I think with technology, the big boys in Singapore, the big banks in Singapore, they of course would want to protect their business. But I think with digital banking, trying them out despite the fact that there are risks involved, gives Singapore a better play in terms of banking, leveraging on fintech and leveraging on blockchain. Lastly, is about promoting innovation. So the framework for promoting innovation has come to a stage whereby you've heard this concept of a sandbox. So regulators in the world, most of them would consider renovation as key, and they provide a sandbox for evolving technology to have this playground with limited parameters for them to progress their technology. And once the technology is progressed to a state that the regulators feel that it's safe, is good, is secure, is good to go in terms of security risk, operational risk, management risk, then this businesses or this blockchain players would be allowed to go to the market. So this is the Oxford Blockchain Regulatory Framework. Just give me a minute, yeah? Okay, I go back to the slide because I have not spoken about the modes of regulations. So regulators have many ways of regulating blockchain really. So there are, when we look at regulation, we should look at legislation as in law, we look at social norms, we look at market forces, and we look at architecture. So if you look at the whole blockchain ecosystem, you will realize that there are a lot of stakeholders, and we can start with the end users, and then we have the ISP providers who are in charge of the transportation layer. Then we also have the information intermediaries, the search engine, the social networks. Then we also have the specific intermediaries like people that provides custodial services, e-wallets, and also the digital asset exchanges. So this group of people will work in their own spheres, and even though blockchain is transnational, each of these intermediaries or stakeholders, they have to operate in a country, or if not, they will have to operate under certain conditions. For example, if you're an ISP operator, there are certain rules that will apply to you, and if you are a custodial agent, there will be certain rules that will be applied to you. So by looking at the regulatory framework in a wider sense to encompass the stakeholders, you can actually regulate the blockchain ecosystem. The other thing really is also about regulating codes and architecture. I think there have been instances where regulators will approach a certain blockchain network and to look at the underlying protocol and even in the underlying smart contract. And what they do really is that they call this the government backdoor. In other words, they want a fail-safe switch where they can say that if this is not working, I would like to actually employ that switch. So there are many ammunition that a regulator can apply. Lastly, and most importantly, it's about regulating the blockchain markets. So the market for blockchain, and so far, if we have heard from Prakash, myself, and other commentators on blockchain, you will realize that blockchain is actually inspired or motivated by an economic activity. So there is always this thing about costs, results, benefits, gains, and even in the protocol itself, the protocol has this thing called proof of work, whereby you contribute towards the protocol and then you are paid by way of an Ethereum or a Bitcoin. So there are many ways in which a regulator can make the cost a bit more expensive, legislate on certain things, and then enforce conduct. So one of the things that you can use is to impose taxes, say on gains by trading of Bitcoins or trading of Ethereums. So on the market front, this is what the authorities can do. And now move on to talk about legal considerations. So largely, we break them into these three types, and then we discuss the law behind these three types. The first item is digital assets. So when you encode the asset, it will become a digital asset. Or when you tokenize the asset, you can call it a digital asset. So in the traditional names that we know them, we talk about shares, we talk about bonds, we talk about art pieces, jewelry, real estate. All these can be tokenized. And once tokenized, they become digital assets. And once in that form, what will not change is the nature of the asset. So if the asset is still a share, is still a bond, they will still be considered as securities. So this will be a very good guideline for us to know then to apply the relevant law for each of these digital assets. We know that in Singapore and in many countries, if you are dealing in securities, there will be a different set of rules. And the general rules will be you need to have a prospectus, you need to register that prospectus, you have rules that it will be under the national law that you need to comply, because you'll be seen to be offering these securities. And if you are offering these securities in the nature of being offering the service as a consultant, a banker, so there are rules to apply as well. And insofar as the prospectus are concerned, there will be certain requirements of disclosures. So these are the rules that will apply in that context. The next thing about blockchain, digital assets will be digital currency. So what is happening around the world right now is a sudden increase in activities in governments and central banks looking at issuing their own digital currency. In China, for example, the DCEP is already in test phase, and it's in various provinces, they are already at trial stage. The main reason for the issue of digital currency, apart from the fact that to be very clear, this digital currency, if it's backed by the central bank, they are backed by their reserves. As opposed to digital currency, the that are not backed by the central bank. So in China, for example, one of the motivation to do a digital currency or DCEP for the country is actually to prevent the shadow banking in the country from getting out of hand by managing the money supply by way of a digital currency that can be audited. The shadow banking in China can be better monitored and even managed. So that's one of the motivation for digital currency. Then there's also digital tokens. Digital tokens would be basically assets that are digitized in the form of tokens. So a digital token can represent entitlements in the form of rights, whether it's shareholding right, property rights, or right to a dividend. Payment tokens will be tokens that are used for payment, and in relation to the regulatory space, regulation is very concerned with digital tokens that are security in nature. Regulation is also concerned about people creating and issuing digital payment tokens that are not related for payment purposes. So you have a whole suite of digital payment tokens now that can be traded over crypto exchanges. And lastly, I touch on smart contracts. So if you take a snapshot of what the smart contracts are, they are basically just codes. And they are codes that are programmed into a language and supported by algorithm. As opposed to the legal contracts that we know, the big difference between the two really is that in smart contracts, they are devoid of the language or the way legal contracts are being drafted. So legal contracts basically are drafted by way of languages, and this is in the written form, our spoken language. And in that written form, we all know that words can be ambiguous, and a lot of legal concepts are also ambiguous because they want to provide for flexibility. So in contracts, we normally see words like good faith, best efforts, but this will not be found in a smart contract and cannot be found in a smart contract. Likewise, in a lot of contracts of buy and sale of properties, you also have warranties and conditions, right? So there again, in the smart contracts, you won't have warranties and conditions. So in a smart contract, with the program written into the contract, they will execute if the obligations are met and the events are triggered. So the smart contract will be very good, for example, in the sense of if it's a REIT situation, a smart contract will be very good. You can write in on the various dates that you're supposed to pay dividends that are declared and announced. And the smart contract will execute according to that event. This event will be the announcement of the dividend, maybe supported by a board resolution, and then they will then pay out to all the REITs unit holder. So that's a simple illustration of the applicability of a smart contract as opposed to the legal contract. What is also interesting in a smart contract is that a smart contract can use Oracle. This oracle will be a third-party source oracle that can basically affirm and confirm the conditions that are stated in the contract, whether the event has triggered. So certain things are very clear cut, that are objective, that are based on, for example, for insurance contracts, if payment is upon death, then death as confirmed by way of by a doctor, by a death certificate, would be the oracle. So smart contract serves this purpose. Then the other thing really we have to bear in mind is the lawyers will ask, is the smart contract a legal contract? I would submit that a smart contract viewed from the lens of common law system will be no different from the way contracts can be formed under the common law system. So long as there's a meeting of minds, there's intention to create legal relationship, there is consideration, I think these are the premises that you can look upon whether smart contracts are legal. But more importantly, because of the rigid nature of a smart contract in defining the parameter and executing very limited and clear-cut and objective situations, smart contract alone may not be enough for some of the transactions that are contemplated by the blockchain network. So the proposal that you find in the literature is to come up with a master agreement where you contextualize, you write in the obligation of the smart contract, and you contextualize why these smart contracts are written in and what are the purposes in which it is intended to achieve. The other thing to bear in mind really is that because of the nature of a smart contract, once it's written and the program is there, the execution cannot be stopped unless there is a safety valve in which you have drafted to allow a halt of the obligation. But generally, you can't stop the obligations from being executed. So what it means is that when you come to this stage, it means that parties have to come back to the negotiating table to negotiate again, and failing that negotiation, it will have to go through the normal alternative dispute resolution modes. Okay, lastly, it's about Lex Cryptographica, which is interesting in a way that we now see a lot of things we do in the eyes of law, legislation, you know, all that bit that's within the rule of law. But going forward with the blockchain framework, with what we've spoken in relation to smart contracts, it would mean that our reliance on all this application and the way things are done will come to a point which is similar to, for example, right now, where on the internet, you know, there are some codes in which you have to comply with if you want to use the internet. And now we have even things like fake news and news about terrorism, hate, which then authorize the network provider to take certain action. Over time, because of all this development, the rule of code, which is what is being codified as the way things are done via all this technology, will actually be a very big part of how we interact with each other, and they will eventually be merged with the rule of law. So thank you for your time. This is all I have to share today.
You are now unmuted.
Hi, thank you, Prakash. No, sorry, thank you, Chung Huat. We hear a lot of good insights from Prakash and Chung Huat. So right now, without further ado, shall we go on the panel discussion? Can I invite Prakash and Dominic back onto the chat? Hi everyone. So let us do a bit of discussion and take some questions from the audience, and then we will also have some form of discussion internally. So let's look at the public chat right now. Elaine has posted a question on whether LXN lumens issued by Stella, is it considered as a form of security or CM product in Singapore? You know, Chung Huat, can you take a look at the question and maybe give a bit of comments from a regulation standpoint?
Andy, I suggest that Dominic take this from a technology standpoint.
Technology standpoint first? Sure. Dominic?
To a legal standpoint, because it's more technology, because it's about protocols and a platform. So I think Dominic will be best suited to answer this one.
Yeah, and I agree with that, because by understanding the technology, right, then the law can give its interpretation. Yeah.
Sure, Dominic, please. Thank you.
Yeah. So this is quite a famous name in the crypto world, Lumen, Stellar Lumen. But I must confess, I'm not hugely familiar with it. There are obviously an awful lot of altcoins. Really, the big two, of course, are Bitcoin and Ethereum. Stellar Lumen falls into the altcoin bucket, and there are dozens or hundreds of these. But Stellar Lumens is quite a big name, relatively speaking, in the altcoin space. So I'm just quickly Googling it and just getting an overview of their protocol. And forgive me, Li-Ling, could you maybe just reiterate the question again for me? Is this in terms of treatment, in terms of security token?
Is it treated as a form of securities? And
yeah,
is it a CM product basically?
Right. Well, I'm looking at the very high level here. So Stella, it says it was made to support digital representations of any currency, and it also has its own built-in token, of course, called the Lumen. So this sounds very similar to the ERC20 standard on Ethereum, which is where all of the ICOs were born out of. It became very, very easy for people to create their own token on the Ethereum blockchain. This looks very similar. The key word here is currency, though, from a legal point of view, I do think. So I quote, Stella was made to support digital representation of any currency. And I have yet to see anything specifically on any smart contract capability here on Stellar Lumen. So, without doing a much deeper dive, my initial impression is quite possibly no, because, currencies are not securities. They are currencies. They're quite distinct asset classes from a regulatory point of view. But as soon as a platform starts to offer smart contract capability, this smart contract function very often can be used, as we are at SDAX, for example, using the smart contract capability to represent traditional securities. So these would be equities and loans, the two biggest classes. So high level, probably not, but I would probably need to do a deeper dive, I think, to answer more properly. Hopefully that's helpful.
Thank you, Dominic. Maybe I'll share a bit of my take as well before anything else. I think whether Stellar, Lumens, LXN, whether they are a security or not, in my humble opinion, when I deal with different governments in the region, my answer to them would be no, it's not. Then this goes back to a few key terms that is in the blockchain space, actually, especially when we talk to regulatories or the government, we will just break this down into three different kind of structure. First, it will be a payment token structure. So when we talk about payment, it relatively meant payment, of course, and it's an exchange. Unlike fiat currency like US dollar or Japanese yen, payment tokens are working slightly different, in different jurisdiction, and how the tax is being added on to such a token. Then you look at another class of tokens which is more utility based, where a lot of utility tokens were actually given birth in the 2017 era, where there were a lot of ICOs going on. And lastly, like what Prakash has mentioned in his presentation, there will be a security token. So I think if you classify these lumens in that aspect, lumen will most likely be fall in the category of payment. So I hope that answers a bit of your query, Elaine.
Yeah. Just that I managed to drill a little deeper into the developer documentation for lumens, and the headline is they speak about currency, but if you look deeper in the documentation, their platform speaks in terms of assets, okay, and issuing assets, and they quote examples, fiat currency, but also bonds, carbon credits, gold. Gold would be classed as a commodity. Bonds would most certainly be a security in the traditional meaning of the word. So it's quite a broad platform. I think you can't simply say, lumens itself, the token for sure is not a security, because it is simply a payment token. But the assets that are deployed on the lumens protocol could very well be securities. It depends on the specifics of each asset. That's, I think, the correct answer.
And looking at the Genius Score Google, my understanding from the website seems to be as if Lumen is a platform. Stellar is a platform, and Lumens is a means of doing settlement and clearing. I think that's the purpose of Lumens, from judging by this sort of view that I've seen from the website itself. Yeah.
Chung-Hua, do you have anything to add before we go to another question?
I think my colleague has actually replied on the chat. So if you can see Li Ling's response, right? I think these are the fundamental guide that lawyers use, right? So generally, a crypto asset would be considered a form of securities if, okay, you see features like voting rights in a corp entity, right to some form of economic benefits. So these are some key indicia that we look for. So I think from what we see so far and what we heard so far, I think Lumen doesn't seem to have any of these features.
Yep, you're right. You're right. So let's give the public chat and the rest of the people to come up with some questions. Meanwhile, let me pose some questions to the panel. I have spoken to quite a few government in Asia, especially. They take on a different stand in terms on how blockchain can really help them, and how blockchain can also help the current COVID situation. Some of them took on a more practical approach on adopting blockchain in a smaller manner, while some of them actually took on to look at how they could change their backbone and make blockchain as one of their key elements. So my question is this: what do you think, in your own personal opinion, blockchain will work best, for you and for the industry? Prakash, maybe you can start first.
Since you mentioned government, I thought we stick to the government point, and considering the elections are around the corner, so I suppose one of the key functions of blockchain is clearly transparency and the manage. It's only a matter of time before we see blockchain coming into polling and elections. And the other consideration, of course, national identity management. And this is again a very key consideration in terms of even for our KYC and AML compliance, right? So once there is a national identity via blockchain, it sort of fits into the whole ecosystem in terms of how we are able to comply and how we manage the whole compliance process. Look, speaking from an industry perspective, I think there are several considerations for blockchain application. Again, it all comes down to the use cases. I spoke about real estate again because it's clearly something that is close to our hearts because majority, if you look at investment portfolios of most people, real estate forms a certain part of their investment portfolio, certainly. And 90% of our billionaires internationally are made rich because of real estate investments. So clearly you see a use case where blockchain can enable a new product that I've already spoken about in terms of what we can bring to market. The others would be, along the lines of legal, which I think Chong Wat will cover very, very, very nicely as to how blockchain is applicable. But I think who has the most experience in terms of how he has seen blockchain evolve over the years, I suppose, will be Dominic. Thank you.
Actually, Andy, I guess your question, you touched on COVID, right? Which is part of the topic of this conversation, on COVID and blockchain. And it's interesting, I was just reading, as Prakash was speaking, about, I think something we're probably all quite familiar with, but maybe the connection in my mind hadn't happened until just now, the connection to blockchain, and it is this. We have, of course, the contact tracing apps, and there are two types of app. There is the centralized app and the decentralized app. So, of course, this is not exactly the same as blockchain, but the principles are very, very similar, right? So blockchain is a decentralized platform or protocol. That's really the heart of it. That's what makes it different to the systems that have come before it. It's the decentralization. And this is exactly the same concept that we see with the COVID tracking apps. So in the UK, where I am at the moment, the government initiative for the centralized app was trialed in one particular remote part of the UK and was a complete failure. From what I've been reading, the centralized app in Singapore, I think, has been, the government has taken a view that I think it's in the order of only 20% of people who are running it, which is very interesting. Comes to trust, it comes to the points that have been mentioned before. These are core blockchain concepts now. In the case of COVID tracking, it is not literally blockchain, but the underlying tenets are exactly the same. It's trust and it's decentralization. So we see on the COVID tracking side of things, and if you look at who is promoting the decentralized model, it's very, very interesting. In COVID, it is, of course, Apple and Google. So, we have to be pragmatic and consider, who do we think can get technology right? Is it going to be centralized government or is it going to be Apple and Google? My money is on Apple and Google. I think they have the right approach, and I think the decentralized model is absolutely the way to go for the same reasons that it's the way to go in the blockchain space, in the money space. So yeah, that was just a connection that just occurred in my mind just as we were having this conversation, actually, specifically about COVID and the interface there with blockchain. But there are other bits that we could talk about that, or how COVID has impacted technology more widely. I think it's quite common. It's quite common sense. It's quite obvious how COVID has exposed a whole new way of working. Again, we can say decentralized, right? We're not coming to offices anywhere near as frequently as we were before. So our physical working patterns are effectively decentralized as well. Yeah, I could talk quite a bit about this, but maybe food for thought for some of the other panelists or members of the audience.
Chungpa, what about you? What do you think would be the best suited industry, for blockchain adoption and implementation?
I think if you look at the key feature of blockchain, right? So really, it's about the data, how best you can manage, store, and even exploit that data. And I think that if the business is reliant on legendary ways of doing things, right? I think blockchain will be even more suited. One example is trade finance. I think trade finance is an area that blockchain is very suited, because we're talking about trust between two parties that is now not on the person's credit anymore. It's now, apart from the credit of the banks and all that, you now get the blockchain, and you get documents on the blockchain, you get the contacts, and you get the ancillary documents all on the blockchain. So you ask me, this is one example of how and what industry blockchain would play a very big role. And one example is also banking. Look at banking. I think banking is the one that is very quickly being disintermediated. And a lot of banks were crying foul for one time, because we have all the small players dishing out microfinance without a bank license. No compliance, no AML, but they make their money. Yeah.
Andy, just to add on to what I just said, I forgot, I missed out on one point which you mentioned, is the COVID-19's relevance. So yes, indeed, lower interest rate and higher levels of liquidity will certainly drive the demand for yield type of products. Then they're really biased for that. And also, asset owners hit by the economic impact of COVID-19 will start to seek and rationalize their portfolio. So, in my view, COVID-19 is basically will basically accelerate the adoption of digital and contactless solutions, and this will definitely increase the pace for what we call blockchain adoption.
Totally agree with you.
Yeah.
I think in terms of what everyone has just mentioned, COVID indeed brought a lot of uncertainty to us, but also at the same time, I do realize that there's a lot of new adoption that is being accelerated very much. One key area would of course be in terms of trading, in terms of cryptocurrency trading, in terms of finance product. But the other one would be something that is a lot more stable, would be their involvement into real estate classes. I do see that there are more inquiries and more government actually are looking at how digital tokenization of a property could be something that would come up next very strongly in 2021. Maybe blockchain and STOs related companies will excel a lot better, in 2021. So I didn't see too many questions on the public chat. So feel free to ask us any question while we carry on our discussion here. Maybe the next question. Let me pose this. I'm very active on Twitter and talking to quite a few big names like CZ, Jason Melankis, who is a very known VC in the space where he invested in Uber in the very early days as one of the investors. So yesterday in one of our conversations, he has mentioned that over 99% of the blockchain companies right now, currently, they are all garbage, and of course, we do have different views in terms of how we classify, some of these blockchain companies. Do you, Dominic, think that 99% of those companies are garbage right now? And what do you think is the good thing, man?
Wow. Well, a lot of them are not even companies, right? In the blockchain world, we have the DAO, the decentralized organization. So again, coming back to this is the core of it all. It's the decentralization. It's the lack of a central authority. Okay, so in a traditional organization, we have a pyramid scheme, we have a CEO at the top and board of directors, and it's an extremely hierarchical structure, evolved over hundreds of years, if not thousands of years, right, of kind of human cooperation. And then all of a sudden comes along a completely disruptive model that says, hey, you know, we're going to, again, work remotely. We're not going to completely flat organization. It's not even going to be an organization. It's going to be a leaderless organization. So, yes, I mean, a lot of these things, whatever you want to call them, let's say, well, they're not orientated to succeed commercially. In fact, a lot of them would say, hey, you know, well, number one, we don't even know who invented Bitcoin. Just think about that. We don't know who the guy is. Now, in what other industry, in what other line of business would somebody invent something as big as Bitcoin and then not even say who he is? So this is a very weird world that we're in. So, you know, Bitcoin was never intended to be a for-profit organization. We've got to recognize this. So the foundation of a lot, so I kind of agree. Yeah, 99 out of 100 crypto projects, we can call them. Let's call them crypto projects. That's an agnostic term. It could mean, you know, some of them are clearly for-profit. A lot of them want to be for-profit. But I think that's in common to any industry segment. You know, if you go to go to the software startup business, 99 out of 100 startups will fail, or 95 out of 100 will fail. That's the condition of being a startup, right? So don't think it's so specific to crypto, but I agree. In principle, I definitely agree. Most early stage ventures do fail. That's just a statistical fact. Yeah.
What about Chowat? Do you have any views on this?
No views on this for me.
Prakash, anything to add?
I think Dom has said it all. Nothing much to add to that.
Okay. I think the point is this. Why I brought this up is because there are a lot of new blockchain companies or projects that are in Singapore. Some of them may not even have a company or any proper legal structure. You know, so you know, some of them, or like myself, I do classify them as good ideas. But like what Jason, my friend, has mentioned, you know, is still garbage in some ways because there's no way for them to scale up. And if they are going after the decentralized modeling, that means there will be a lot of problems downstream. So it goes back to the legal aspects of things, right, Dominic?
I think it really depends on our viewpoint too. Like from a VC's viewpoint, who is really there to invest money and make money in a commercial enterprise, many of these things may be viewed as garbage because they are never going to return money to him. So from his perspective, they are garbage, right? I remember what Warren Buffett is famous for saying about Bitcoin. They call it the rat poison squared or something. It's terrible stuff. It's just worse than the derivatives. It's worse than gold. He's not big on gold either. That's because from his perspective, his mentality, you know, Warren Buffett is a value investor. He wants assets that are going to return him productive assets, right? So his big example is farmland. For him, farmland is the ultimate asset. You own the land can produce for you. And if the asset, for him, for his mentality, if the asset doesn't produce, it is worthless. It's so I think it really depends on your viewpoint. But for, you know, everyone who is using Bitcoin to make transactions, I met a friend yesterday. Was quite early into Bitcoin, luckily for him. But you know, for him, you know, his day-to-day, you know, let's say, is when he finds another company that accepts Bitcoin as a means of payment, he's a very happy guy. And he was telling me he found a computer supplier, very famous computer supplier. They've been in business for 30 or 40 years in the UK. Very good brand, equivalent to, say, Challenger or something in Singapore. These guys are accepting Bitcoin. He's a very happy guy. So from his point of view, would you say Bitcoin is useless? Hell no. He can buy his computers with it. So I think it really depends on your viewpoint. What are you trying to get out of it? You know, from a VC's point of view, definitely a lot of these projects are not investment opportunities, not good investment opportunities. But from a techie's point of view, like me, wow, a lot of these projects are just fun, fascinating project, right? So what is your viewpoint? What's your criteria? We've got to ask that question.
I think it goes back to the commercial aspects of things. You know, if if you put Bitcoin aside, we just look at the blockchain element in terms of how the concepts can go into real world scenario. I think perhaps maybe really 99% of them do not really go very well with the real world, because a lot of things dependent on scalability, a lot of things dependent on the network that's around. But if you come back to the point of Warren, mentioned about his views on Bitcoin, I think Bitcoin is a totally different animal. If one day Satoshi were to be found, I think Bitcoin's value would drop to almost nothing, because it's just a marketing scheme in some ways. But if you look at the payment aspects of things, PayPal initially mentioned that cryptocurrency or Bitcoin is not actually a thing, but now just last week or so, they announced that PayPal and their subsidiary will look into using Bitcoin and maybe some other cryptocurrency as one of the the currency, for their payment. So I think with that there will be a lot more adoption, and there will be a lot more vendors, like your friend, vendors joining into this cryptocurrency family to enable them to transact. So just another quick update. Yesterday I had a chat with the South Korean Tech Association. Right now there are about 16,000 ATMs in South Korea that allow you to use cryptocurrency as a form of withdrawal. So TRX is one of them who are on their network right now. So I do hope to see more of this coming into place. So let's look at the Prakash. You have something to say?
Yeah. So coming to the point about the extensive use of cryptocurrencies, and you look at some of these crypto exchanges. Recently we had a discussion with the guys from one of the largest crypto exchanges in the world, and they tell us that the single day trading volume is in the region of minimum $1.65 billion. That's a single day trading volume, and that's how huge this market is. And it's just a matter of some of these overnight millionaires now moving their interest to other areas, and they will need to liquidate. They will need to change their cryptocurrencies to something that's more tangible. So, or something where they could actually, buy on shares or interest in other sort of asset classes. So it is bound to happen, and we expect that to happen really very soon.
I agree with you. So we have some questions from the floor by Vincent Chen. His question is, in the healthcare industry, what would be the main driver to adopt blockchain? Who will be that driver? Is it the government, the medical companies, or the public? In your own opinions, panelists, who would like to take on the question first?
Okay, so maybe I take on this question because in my slide earlier I talked about healthcare. Maybe I rushed it. I think in the healthcare industry right now, many features of the blockchain technology is actually very well suited. I think one of them really is about the nature of how the information is kept, the security of it, and also how this information can be shared. All in all, I think the biggest threat to this information is cybersecurity. So the nature of the security of the information and the way the blockchain technology is, that actually averts cybersecurity risks. That's one thing. The other thing really is that in relation to the ability to access this information, if you talk about public and a private key and all that, these are also arrangements that can be adopted for telemedicine, teleconsulting. So I can see the pieces falling in place for the healthcare industry. And the other thing which I think is even greater really is if you go down to the supply chain, right? I think medicine and health products are heavily regulated. So if we can put a blockchain on it and we put the smart contract on it, because of the specificity and the objectivity of all these things, right? The smart contracts application is really very suitable.
Totally agree with you, Chung Hwat. Dominic, do you have some points to share as well?
Yeah, I mean, I think very simply, I think the driver for this will come from the people, from the public. I don't think it will come from government. And I think exactly per my previous example, we've seen exactly this with the COVID tracking. Government's instinct is to centralize. They can't help it. They are a central organization. By definition, that's what they are. Both Singapore and the UK government had exactly the same instinct, which was, hey, we'll build the app, we'll centralize the data. And you know, this is not what people want. This is why only 20% of people run the app in Singapore. It's why not even get to 2% in the UK before the whole project was abandoned. You look at again at how Google and Apple are approaching the problem. They get this. They understand the some problems are just inherently better in a decentralized way. But I agree from a data privacy point of view, medical data should be in the hands of the people who own the data. That is us, the public, not corporations and not government. So that's my kind of philosophical view on it. I think it'll be driven by the public more than anything.
That's true. Prakash?
Nothing from me, Jim.
Okay, so maybe I share my view from these three different driver. You know, first of all, I think when we talk about blockchain, we got to be a lot more specific. You know, so for the healthcare industry, what is the government driving towards? I think they can use blockchain as a form of security to secure your data and to secure their system. You know, so I think they will adopt blockchain in that manner. As for medical companies, because there's purely it's purely a transactional profit-driven main motive, right? So medical companies, most of the time, you know, based on what I see in the last 3 years, and also like what Chung Hwat has mentioned, they look at how they can trace their medical products and how they can trace their medical supply. From there, you know, that will help their business. And like Dominic has mentioned, you know, I think healthcare data should be something that owned by the patient and by the patient only. And I think we should stick to that point of having our data placed in a blockchain, or maybe placed in a more public blockchain where it's secured by keys that we know only, and giving access to doctors or medical facilities when needed temporarily. So I think the driver is not so straightforward as in, you know, one strategy fits all, and that should be how people look at the adoption of blockchain technology. So next question we have on the floor would be by Barry. People are still confused with the technology and the case for DLT versus blockchain, you know, and versus Bitcoin. Dominic, do you think you can share with us the difference between DLT, decentralized ledger, versus a blockchain and versus Bitcoin?
Well, you know, there you go, right? You said decentralized ledger. In my mind, I always had it as digital ledger technology. It really depends on your terminology, on how we're defining things. I mean, decentralized ledger and blockchain, I think, are almost synonymous on many levels. I mean, I suppose a DLT would not necessarily need to be in the form of a blockchain, but pretty much all of them are, right? So a blockchain is obviously the addition of blocks to a decentralized chain of blocks, hence blockchain, and that by itself would say a ledger. And then, of course, with things like Ethereum, we have the capability to build a ledger within a ledger. So this is smart contract capability. And Bitcoin itself, you know, people use the word just to mean money, right? So when you say, I'll pay you Bitcoin, or have you bought any Bitcoin? Have you invested in Bitcoin? They simply mean to say, have you bought any of this currency or commodity from an investment or a kind of monetary point of view? So these are how the words, I think, are best viewed. Blockchain is the underlying protocol that Bitcoin invented. It enabled Bitcoin to be used as a means of payment. So that's Bitcoin using it as simply to mean money. Blockchain is the underlying protocol, and the DLT, we should probably view, if we call decentralized ledger, we should say, well, you know, the Bitcoin ledger is one example of that, but then things like Ethereum and other smart contract platforms let us build other types of ledger on the protocol itself. Okay, so it expands out. So in simple terms, I think Bitcoin we can consider money. Blockchain is the protocol, and the DLT is, we get into things like you know, tokens, ICOs, and the security token space.
Thank you. We still have time, so let's have some other questions. There's a few other questions on the floor, but before I go into that, maybe we talk about something a bit more generic, but of course pertaining to blockchain. There are a lot of people who talk about the concept of total decentralization, you know, which means no government, no bank, you know, no nothing kind of movement, you know. But to me, I always talk about the word re-decentralize, because the word decentralization has evolved and changed very much, you know, in the recent times. So putting the question to the floor is, how do you see decentralization, and do you really think that total decentralization is the way to move forward, as some of these tech futurists has mentioned in many different articles?
It's a very deep question.
I think we'll convert the deep question into something more practical, you know, like a discussion, because the word decentralization has really evolved into a very extreme cases when you talk to purist tech guys who are looking at that technology, you know, versus business people like us, you know.
Well, I can speak from an engineering and technology strict point of view, is that, you know, there are very unavoidable, almost mathematically true trade-offs that you have to make when you are moving from a centralized system to decentralized, or vice versa, right? Decentralized systems are typically more fault tolerant. Okay, and this is the whole uncensorable nature of Bitcoin. So no central authority can come and just turn off Bitcoin. It doesn't work like that. There's no single point of failure. It's very common sense. If something is distributed over many nodes, clearly it's more fault tolerant. That's the gain. On the downside, it's going to be slow. Right? It's slow in its throughput, because every single node has to receive the data, process the data, and all the nodes have to agree with each other periodically. That's what the new blocks are all about. Right? So these are fundamental trade-offs from an engineering point of view. That's all I can, you know, say. Let's look at it on that level. But your question was, you know, a bit more philosophical, really. Was, you know, I mean, in terms of why do we operate our societies in a centralized way? Well, there are some very good reasons for that. You know, we look at the top of hierarchical pyramids. If we look at the examples of very good governance, you know, we talk a lot about these things for a very good reason, because if we have good people leading us, in general, we can go in a good direction and get good things done. And then, you know, there's a reason. There's a reason we have leadership, and there's a reason we have structure. And I think, you know, that doesn't change. But you know, as we develop more and more capable technological systems, yeah, there are some reasons sometimes to distribute things and to decentralize things. But but it is not, a kind of go-to option that we always must decentralize. No, it doesn't make any sense at all to think in very binary terms like that. That makes no sense. So I would come back again to I think it's common sense. Look at it from an engineering point of view. Sure, you can do things decentralized. You'll gain on these metrics, but you'll lose on these other ones. So you've got to make a decision. There's no silver bullet to win on both fronts at the same time.
I agree. Chonghua, do you have any views on decentralization? What's your take from a law perspective?
Okay, from the law perspective, I take the pragmatic view. I think the law is always behind developments, okay? So I think the law is playing catch up. So as you can see from the MAS way of approaching the regulation, I think MAS is really on definitely the better side of regulating blockchain. In fact, I think they are progressive compared to many other jurisdictions. I would think that pragmatism would come to adopt the right technology that will work, whether in commerce or whether in government. So, and then because like we say, blockchain really is about economic activity. So the driving force behind this will make it work, and I think then the regulation and the law will then come to support what we want to achieve via the blockchain network. One example is in all the things that we have spoken about, right? Security, digital asset tokenization. If you look at the whole value chain, apart from the technology, apart from the smart contract, there are still the traditional framework of corporate finance. There's a traditional framework in which how REITs units are sold or a property company shares are sold. All this old form of traditional finance must merge with must adapt and merge with the new technology, and then make room for the improvement. So in this case right now, I believe all the traditional documents will now have to make room for consideration. And one of the biggest challenge, I think, for the smart contract application within the blockchain network really is this consensus theory. Because in a lot of this securities transaction, you have a group of people who have committed the obligation based on certain set of parameters. And when you want to change these parameters, you need to go back to this group of people. There has to be a mechanism whereby this mechanism has to work and work in a very fast way. And I think there are a lot of issues here. It's about the down to communication, down to how to notify the rights, how to make sure that this is something that the changes to the terms will now be enforceable and recognized by law, and how the regulator will look at this as well. So it's a whole value chain and evolution. But one thing I believe is that just like ourselves 30 years ago, when we look at internet, right? We never knew the possibilities of internet. But I think this is what it is. It is 30 years down the road. And all these things that we are talking about, I hope the audience will take to heart that I think things will develop even much faster.
Totally agree with you. Let's look at one or two more questions from the floor. We have one from Moon Yu. The question is this: I think we need to clearly separate the enabling aspects of technology to the exploitation of it for the right or wrong causes, right cases. Given the problems confronting the world today, from decentralization, increasing protectionism, unequal access to finance, the question is how the technology can be leveraged to reverse some of these negative trends for the common group. Prakash, do you have some insights to share on that?
I'm trying to digest the question first. Well, give me a second.
It's like how the technology can be leveraged. Maybe technology like blockchain, maybe even IoT, AI can be leveraged to reverse some of this negative trend that's in the market.
Maybe I can take this question on. Sorry, Prakash.
Yeah. So as I mentioned in my presentation earlier, if you take Bitcoin as an example, why Bitcoin becomes such a hit is because people, and it happened straight after the subprices in 2007, 2008. Largely because people completely lost their faith in currency, lost their faith in individuals and governments and the way they manage currencies, which is why they wanted to go into Bitcoin, which was managed by technology, which was managed by algorithms, and it was in the hands of technology. You see, that creates a certain level of independence and no central control. And that's the purest form of blockchain. And this is again going back to the earlier question which you posed, which this again it all ties in one thing, again, it's a process of evolution, right? Whilst we want to make sure that we still maintain some control over the whole process, by putting in place governance, putting in place some sort of corporate compliance, right? But eventually, all this has to be overtaken by technology. It has to be a case where there is no, because otherwise, when you have somebody centrally controlling this, there will be vested interests, right? And we want to avoid that situation, right? And that I believe will be what we will see in the future.
You got a good response. Chungwat, you have something to add just now?
Yeah, so very quickly, I just wanted to answer Yuman because I think he seems to be asking from not the commercial perspective, but more for doing good, and also to actually allay some things that I think we all know is negative, like globalization, rich-poor divide, protectionism, unequal access to finance and all that. So I think what we are talking right now is concepts that are being applied. First, we're talking about voting. Blockchain has been applied for voting in Thailand as well. So why blockchain is good? Because with the blockchain technology, really you can have an audit trail about the votes, and you can also identify the right people voting. So voting is one example. The next thing in the South American countries, blockchain has been applied towards procurement so that you minimize corruption. Next thing is on sustainability. There are many things happening. One of the things really that we also involve, we together with Air Carbon Exchange, we are the shareholders. It's a very good company. What this company has done really is that it's providing a platform for the trading of air carbon via blockchain that will give price disclosure, and that will also avoid corruption or unfair dealing. So some examples over there. Unequal access to finance, yes, because a lot of people don't have even identity and all that. So with blockchain, with microfinancing, this is also becoming a reality. And one example is in Indonesia. So these are some examples that blockchain is being applied right now as we speak here. So I hope that's good enough for Manu.
Thanks a lot. Dominic, you have something to add?
No, I think you guys have covered it very well. But I mean, just in general terms, I mean, I'm again big believer that technology is just a tool that we employ. Blockchain is just one particular technology, and just some examples that come to mind recently. We see all the disturbances of social unrest, for example, in the States, but course, not just there, but this is the most recent one. And we see how, you know, we all carry around with us on our phones this incredible capability that even 10 years ago would have sounded like complete magic. You think about it, you can broadcast to everyone in the world at the speed of light, completely for free, whatever you want, whenever you want. It's absolutely incredible. And we see this, we see public reaction, we see bad things happening, bad people, people broadcasting, maybe. We see the complete change of how media and communications are happening. You know, everyone is getting their news from Facebook and Twitter, which 10 years ago didn't happen. We see elections completely derailed as a result of this around the world. So, but at the same time, you know, hey, if we didn't have the phone camera, would we even be aware when the police did something wrong and it wasn't being, you know? So it's just a tool. It can be used for good and for bad, I think. Ultimately, this blockchain will be the same. It is the same, you know. We have to put the good into it. Let's put it like that. I think, you know, there's no magic technology that's just good. No, I think it's just a tool and we have to use it in the right way for good. Yeah.
Correct. This applies for all kinds of technology, not only for blockchain. I think we have almost reached the end of the session. Can we have each panelist to have share some final words with our audiences today? Prakash, can you start first?
Sure. I think it was a fairly interesting discussion. The idea why we are doing this is because I think there's a great need for us to be out there educating the market on the merits of blockchain, the merits of how people are able to see use cases coming in to help, you know, not just from a commercial standpoint, but there is also a societal common good that we can do, which blockchain can help. And there's something that's a separate discussion altogether, which Chongwat sort of alluded to, you know, and there's so much more that we can do that I think we would want to see more of these, you know, seminars being conducted, you know, basically to be out there and educating the market. And when we really see, I mean, if you look at it from the topic of discussion today, at least what I spoke about on real estate tokenization, if eventually we see a lot of these exchanges coming up, it will be good for the public at large. You know, for now, we look at the qualifying criteria for anyone who wants to invest in one of these exchanges. It is only open to accredited investors. But we know with stronger education out in the market, we'll eventually see, you know, a lot more retail investors coming on board. Once there's a lot more protection, once there's a lot more compliance surrounding. Again, this is an evolution phase. There's always a start point, and it's great that we are starting right now. And there's a lot of government drive and regulatory input, you know, especially in terms of how, you know, it's always important to always put innovation before a regulation, and that's something that we are very, very fortunate to have, you know, MES, you know, taking the lead on that. Yeah, thank you.
Dominic?
No, I mean, I've really enjoyed the discussion. Actually, it's been good. Hopefully, very helpful to people listening. It's actually been helpful for me, and just in understanding some ideas in my mind a bit more fully. So I've enjoyed it. So thank you.
Thank you, Chongwat.
Okay, so maybe I end with 3 points that I have in mind. So one is on speed. Okay, I think if you look at what you've seen in history, I saw from what Elaine said, right, that during the financial crisis, okay, Bitcoin came to life, right, because people were fed up with the financial systems. Likewise, right now we can see Libra Association coming up. We see a lot of nations now wanting to have their own digital currency because they feel that the international financial order is lopsided. So the trending is such that, and with the advent of blockchain at this point in time, I think the trending is there to make blockchain an unstoppable force. Next thing is the extent. I think the extent itself will also be great because of some of the reasons, some of the geopolitical factor that we all know. Right now, we know for sure that China is intensifying its DCEP because China wants to have their own financial system that can be more entrenched, that can be aligned with the international financial order. So steps are being taken at a huge pace, in China as we speak right now. And you asked me, then the other thing about the extent is really about the applicability of this technology, which is one example on centralization. There are things that the government will want to use blockchain for because it's just a more superior technology. For example, traffic fines, right? If you have blockchain, you have Oracle, you have smart contract, you have Oracle, it's very easy to determine who has breached the law. And once it's breached, send a ticket, you cut out corruption. So there are many areas in which I believe that blockchain will be adopted, including the voting process. Today, if we have blockchain in the voting process, then even in COVID, there's nothing to worry about, right? Correct? You just scan and that's it. So this is one example of how things will evolve, and largely here. I believe that the legal framework will be adopted to support the technology as we have seen in the past, and this change will also embrace some of the technology with positive development into forms like, I think you would have what we call customized forms, or even standard rules maybe in relation to some smart contracts. So then you can simply just put this contract, in the various sector for whatever activity into the smart contract, and that would be a model clause or model contractual terms. So these are the evolution that I see, and ultimately I think for resolution of disputes, right, I do think that it will also come into play because some matters are better resolved by oracles that are not humanly motivated. So that's why I think will be the last bit on the legal changes.
Thank you,
I agree.
Thank you, Chong Wat.
Yeah.
So let me summarize a bit. I think all the panelists have given very good insights on the topic for the new technology, blockchain. I do believe that key powers or key blockchain adopters will be in the ASEAN bloc, and also the very strong push in China, for DCEP and their latest initiative, which is the Blockchain Network Service, which is trying to connect on a national level using blockchain, would be a very big force for blockchain to grow. Lastly, I want to mention this. I think in the blockchain industry, we need a lot of good people gathering in this industry. If we have a lot more good people who are experienced, talk a good sense, that would help to drive the technology forward. So ultimately, I think my point is this: the key thing that we are building right now is a new value of trust that is only provided to us most recently and more acceptable most recently with the use of blockchain. And the future of blockchain really depend on us and how we want to implement this. So thank you everyone for being here. Thank you panelists for the insightful discussion. We hope you learned something today with our inputs and our knowledge sharing process. We look forward seeing you in our future events. There are a lot of other events, online events that CABA, China ASEAN Business Alliance, will be pushing out to everybody, sharing knowledge again. So this is the event calendar for 2020, driven by the CABA team. Thank you. Stay healthy.
Thank you, Andy.
Thank you.
Thank you, Andy. Thank you.
Thank you.
Take care, everybody. Bye.
Bye.
Bye.